The first quarter of 2021 in the prime central London Mayfair market has been challenging, principally because we haven't got overseas buyers coming across. And although we managed to trade very well through the initial lockdown periods, this one has been different. The streets of Mayfair are very quiet. The streets around Belgravia and Knightsbridge are very quiet. And it's been an issue, but we are aware from our discussions with our clients, they are desperate to get back to London. So it has been a difficult time, but we are seeing some activity, but not enough. It's going to improve.
I think what's been going on in the first quarter of the 2021 market is we have seen a lot of demand for a very specific type of property. Things have changed with the pandemic, so people want outside space. They want building a fewer apartments because they don't want to be in a lift with too many people. They really want their own front door, and the demand for Notting Hill and moving further out has gone through the roof. Our biggest demand has been houses on communal gardens in Notting Hill.
Agency, we've been extremely lucky. We were able to continue working, we were able to continue servicing our clients, and for those who were looking, continue to show property, continue to get out there and keep everything going in a sense. The 6 months of 2020 were extremely good. The first 6 months of 2021 have been even better.
So the places that have been left behind in the first quarter of this year have noticed an unfortunate real price reduction. So to give you a prime example, the street that we're based on in Marylebone, this is a red brick mansion block led street of over 300 apartments, ranging from 1 to 2 beds. Historically, that would have been your European foreign worker who would have come over here working in the banks, a student working at one of the universities who was paying $750 a week for rent. That rent has now dropped to $500 or $550, and so they're finding that the value of their property has dropped because there is more supply now. As clients can't rent out their flats for the premiums that they used to get, they're now selling.
There has been a growth in the rental market for the super prime homes, yes, and in fact, not only a growth in availability, but a growth in demand. So we're lucky to have done some very important rentals on some very large properties. Having said that, the stamp duty surcharge of 2% for overseas buyers is coming in, and we don't believe that actually is going to have any effect on the super prime market, because if you look at London compared to other, what they might consider super prime markets across the globe, it's still relatively good value.
More and more people are vaccinated, and that's happening all around the world now. More and more people that are getting vaccinated will allow them to travel more. I know we have a lot of people from the Middle East and the Far East looking to coming into London, which is really where they're normally where they are around this time of year. And I think once they've had their vaccines and once they're freer to move around with or not so many restrictions as they've got now, I do believe the market will continue and other inquiries will come in.
What we're seeing is enormous pent-up demand. So we speak to our clients all the time from everywhere across the globe, and they are very, very keen to get here and spend money. These are buyers from mainland China, Hong Kong, the Middle East, India, and interestingly enough, a big uptick in activity from the United States. But our prediction is certainly not until the end of this year, but more likely early next year, there's going to be a wall of money coming into the UK.